Oh, you're recording it. That's why I stopped the
No.
Bluetooth.
Oh yeah, no, I'm in a meeting.
What up?
How's it going, guys?
Talking with whoever's running the OOT page because I can't see any of the mastermind videos in that tab. That's why they asked you.
Oh, it might be a permissions thing. Give me let me check it out. Uh, uh,
Not like I need them right now or nothing, but I just wanted to. I checked it because they said that they posted it, and I wanted
yeah.
to make sure it was all
Uh,
there.
let's see. Give me yeah, I can probably make this happen. I think I think I can do that. Welcome everybody. We'll give this a couple more minutes. Give me a second. Okay. Uh, classes. Did he move it? Oh, there it is. I see. Okay, edit channel. Permissions. Let me know if you can see it. Rudy, how we doing? Welcome everybody. We'll get rolling here in a second. Oh, hey, we aren't even 5 o'clock yet. We're good. 1K, how we doing? I'm leaving mics unmuted, so I always say hey. Let me know if that worked for you, Robs.
Hold on, it was blank a second ago. Let me try and reload it.
What did it do, River?
How's it going, dude?
Yeah, that's good now, bro. Thank you.
Yep. How's it going, everybody? How you doing? Amazon clobbered, huh? I haven't read the reports yet. Gotta be some AWS issues there, huh?
Hey, I wanted to ask you, and you might actually get into it in this lecture, but what's your thoughts on like say for earnings? I hold Apple and Amazon in my Roth.
Yeah,
Well,
who
what?
cares? Don't look at them.
Oh, I know that. I
Buy
know.
more.
my
Can
my
you buy
my
some?
thing is like, what's your thoughts on for earnings season to hedge? Like, let's say I have shares of Amazon, but I buy Amazon put. If
Nah,
Amazon rips, I
you
make
really
money on the
don't.
stock side. You know what I'm saying? And if it dumps, I make money on the option side that I could use to add more shares. You know what I'm talking about? Does that
Yeah,
sound?
but like 9 times out of 10, you're gonna lose, because even if you're playing it as a hedge, it it costs you so much for that hedge that it's just not worth it. Like what? Like, I mean, I guess I didn't look at Amazon contracts or anything, into the close, but like, let's see, what were we trading? What were we trading at close? 190s. I mean, $600 to give you a hedge, and those will be worth $75 or $50 at open. So you're better off just eating the 6, 7, 8 buck loss per share, as opposed to losing the $600 on trying to hedge with it.
Through
So
that, I didn't look at the contract prices. It was just an idea that popped in my head like five
yeah.
minutes ago.
Yeah, and so I mean, if you did, and we can just chat. If you did want to hedge, maybe you were concerned with downside. do an SQQQ, do something else, use a different instrument to kind of hedge, you know, because we know Amazon creators, it's going to pull the Qs with it, you know, so you can even just, you know, hit a few SQQQ shares into the close. I mean, you know, if you're thinking hedge,
Those are sellable in after
yeah.
hours too.
And
Right?
yeah,
So
and like I
makes
mean,
sense.
and you know, I mean, maybe you don't, maybe you're thinking, you know, you're 20 minutes, half hour, or whatever it is to close, and you're like, whatever, I'm gonna slap on some SQQQ shares. I mean, on that pop, you're making 4% on shares. You know, don't get me wrong, it's a big dump. Like, I'm not trying to, you know, it's obvious. It's well, if it's 4, then it's like a 3 over a 1% dump, you know, on the Qs. So, but hedge with something like this, because you know, for the same reason that, and we're gonna talk more a little, you know, a little bit about this. For the same reason that it's hard to make money on options on a uh you know, for like it's hard to make money on options for ERs. The same, it's hard to hedge with an option like on a specific name for ER, just because you know, the market makers are good. They price those things how they should be priced. Like they know what they're doing. Like, you know, it's not manipulation, it's not anything like that. They're just good at their jobs, you know, they know what they're doing. And so they price them accordingly, because if they didn't, you know, put that focus into pricing it, then ERs would be easy. Like, if you know, if we had normal prices on contracts heading into an ER, you strangle and you make money. It's 100% guarantee, and there's never 100% guarantee in the market. You know, they protect their risk very, very well in pricing those options.
Yeah, it makes sense. Thanks, brother. Appreciate
Yeah.
that.
Yeah. And you know, I mean, you can always do like what, you know, check a QQQ put, you know, those kinds of things. You'll get a cheap one. You know, worst case scenario, you lose about 100, 120, 130 bucks. Best case scenario, that thing prints for you, and it probably covers your share drawdown, you know. But individual name is typically not the way to go about hedging.
One thing I do is my long-term port is different mindset, different account, like clearly. And so my option trading account, I'm just thinking about options. My long-term shares is just like that River said, just don't look, you know, check back in 20, 30 years.
Yep, just don't look. And that's the thing, you know, with things like you know, like you said, you hold Apple and Amazon, good. Keep holding, you know, like I mean, uh, I laugh at all these people, oh, we need a dip, you know, so I can buy shares. Like, well, whatever, dude. Buy some Amazon shares, dude. Like, who cares? You know, like, I mean, not for a trade, you know, like if you're really thinking of it as a trade, of course you need to think about your entry and stuff like that. But like when your planned sell date is, you know, 2040, maybe just don't look at them.
Right.
But 1K's right. You have to think, you think of those things separate, long term versus, you know, your day trading or options port or whatever it might be, you know, shorter term, more trading more than investing stuff. You just really do think about them different, you know. And don't get me wrong, like, let's be real, like I haven't read the Amazon report. I'm sure they did good. I'm sure they made a ton of money, but let's be real, we all knew that like it was probably going to come down, like just with tariff uncertainty. Even if all the numbers are good and everything's good, you know that somewhere I haven't read it. I can guarantee you somewhere in the guidance there is likely the word uncertainty. And that, you know, I mean, that's enough to sell things right now, because like, you know, it's all Chinese products on Amazon anyway, whether we want to admit it or not, you know. And then when you get all of that, and then I guess, well, again, I haven't read the guidance. I'm sure it's probably gone down. But it's such a large part of Amazon's business is third-party sellers. A lot of folks don't think about that, but it is a gigantic part of their business. And so when you got imported Chinese products going to that third-party seller, it's hard, you know. I mean, those margins start to get tight really, really fast. Oh, burnt peanut. They did a little choppy action here. Yeah, I didn't do much today. Hit this. This was a nice one. Got in there on this. Second. Oh yeah, of course there's only 17 people, dude. Yeah, these are, you know, these are like the most important classes I do, and they a lot of the time they just have the lowest attendance. Let's be real here. You can be a pretty shit trader, but if you have good trading psychology, you can make money, you know. But
Dude, the
But
psychology classes are my favorite. Like I said, I was telling you a while back, I'm at this point now where like that's where I'm focusing on is trying to get the psychology part under control. Everything
yeah,
else is like easy to learn, you know?
yeah. And trading, I mean, trade, you guys have heard me say it a million times, I mean, trading's easy. We make it hard, we get in the way of bad, like we make the bad choices. We do the things we know we should not be doing. And like very often around the time we realize like, okay, I did this and I should not be doing it, people just stick with it. Like, even though they know, like they know better. And it's, it's hard, like the psychology part to just say. And the main thing that I talk about trading psychology all the time that's really, really hard for people is clicking sell when you're red, because you're admitting defeat. Like that money is now gone, and something that I talk about. Oh, whatever, let's get this rolling. Welcome everybody. Dirty River, happy to have you trading psychology, obviously. So tonight, want it to be a discussion. As always, I have some few topics that I'm going to touch on. I try to get through all of my yapping, in the first 20-30 minutes if I can. And I love these turning into a QA, any of those kinds of things, even if we aren't, if there's not trading site questions, normal trading questions, what's going on with the market, economic stuff, if I can answer it, I'm happy to answer any questions we have. But like I said, a few things, trading site wise, that I want to talk about tonight, just because I talk to everybody. I get a lot of DMs. A lot of people try to talk to me. And so I tend to have a pretty good feel of what's going on for people, day to day. And something that I've been talking about over the last like month and a half, this market's insanity, all day, every single day. You never know what's going to happen. There's always some sort of news on the horizon. Like when you see this kind of movement, it's fun. It's exciting. You make less money.
We're one tweet away from getting blown out.
Yeah, exactly. But this builds horrible habits. Welcome everybody, Scotty. Oh, let's see. I'm going to go through these real quick, and then we'll get back to talking. Yeah, Scotty, I'm kind of hearing a lot of that of, like people are trimming right now, and really cutting down on hours, really cutting down on just, a lot of people front ran these tariffs, and now it's that limbo of, do I wait to buy? Do we buy now? Are these tariffs going to go into effect? Everybody wants answers and nobody wants to jump the gun. You don't want to place your order, have your order show up, pay a gigantic tariff, and the next week those tariffs are gone. So there's a lot of people in limbo right now. Welcome. Oh, we got the senior banker in here. Wow. Senior banker in here. Yeah, there you go. Exactly, Scotty, selling the pre-tariff stuff. And that's, the big issue right now. I mean, I've even started to see, I've already been starting to see, screenshots. I don't know if they're real, things like that. But, of like, oh, $500 order. And then you have to think a $500 order, pay 125% tariff. So you're now paying $625 tariff on your $500 order. So your $500 order that maybe before you had to pay $100 in fees, suddenly you're paying close to $700 in fees. And what cost you $600 costs you $1,300. So I mean, yeah, it's a little worrisome. Oh my God, burnt peanut. Yeah, and Scotty, I mean, I feel horrible, that's what I've said this whole time, like don't I don't want to be gloom and doom. I don't want to do anything like that, but I always want to think about the people, think about the American people. That's my number one concern. And I just can't see how this doesn't really negatively affect the consumer as well as small businesses. Hopefully I'm wrong. I would love to be wrong. But I just have a very difficult time seeing how this doesn't really, really hurt, the middle to lower class, especially. So we'll see. We'll see here. Norvin, check D-Dog. Nah, ask me at the end of class though. And then so tonight I'm gonna put it out there. Leaving the mics unmutable. So if you guys have questions or anything like that, feel free to jump in. Norvin, that does not apply to you. Yours is on mute unless you raise your hand. Everybody else, feel free to unmute those mics and ask questions, you know, and Narvin, we will make sure we get to D-Dog at the end of the day. Okay, so back to trading psychology. Oh God. Oh God. So back to trading psychology. This chart, you know, is it fun? Has it been exciting? Has there been fun dip buys? Has there been really fun shorts? You know, of course, it has built horrible habits. And so that was kind of what I mentioned, one of the main things that I want to talk about. And what do I mean by bad habits? Well, we look at this chart and, you know, we just see candles. If you don't look over here to the right-hand side, I mean, obviously besides this, like, you know, these monsters down here, you don't necessarily realize that this is 12 bucks or $13 candle. Oh my God, Norman, I love you. This is a 12 buck or 13 buck candle or whatever it is. And we have got somewhat desensitized to that. You know, if we go to a different chart and we start looking, you know, much bigger picture, and we start looking at, you know, all of these candles over this, you know, previous years, and then we start looking at these ones, you don't realize it because, you know, we're getting desensitized to it quick. These are some of literally the largest single day dollar moves that the market has ever made. You know, they're historical. So what are the bad habits people are building? Holding and praying, you know, obviously, you know, I far from think we're out of the woods at this point, you know, I mean, I think you'd have to be crazy to think we are, but we've had a lot of days where, you know, here's a nice one. And you don't even realize it like on these charts anymore. But here's a nice one. Market gets clobbered $6, $7, something like that. And then the market runs back up $8 or $9. And so what was, you know, like, what is the bad habit here? The people who bought longs early in the day and were dead wrong, those things went minus 99%. They run back to the highs and they make money. It is one of the absolute worst habits you can form in trading. And think how many days, you know, we've had just these insane V-shaped recoveries, or we rip in the morning. Here's a great one. I'm sure it was news or whatever. You know, we put in a $7, $6 rip in the morning and people short. They're short this whole way. And then at some point throughout the day, they end up making a ton of money. It is a horrible habit. I'm seeing it, you know, a lot already. And where do these habits start to become the issue? On days like this, where this is great. This is super tradable, very large moves. Admit you're wrong when you're wrong, move on, look for a new trade. But the people who chase the longs up here that have had these habits of just holding and it comes back for them, they didn't get saved. Or the people who chase the shorts, oh, yep, market's going back to zero. Well, they don't get saved. So that is the habit that I'm seeing over and over and over again. And now in recent days, as we've started to have, you know, is this chop? Yes, it is undoubtedly periods of chop. But you guys know me, I always tell you to look at the big picture. This is an $8 move on SPY intraday. Is it chop? Sure, but it's a huge move. You just need to admit you're wrong, move on, take new trades when they show up. And so as we're seeing, I don't want to say the market coming back to like normalcy, because it's not. Like, the market is still so far from normal, it's ridiculous. You know, this is someone who was asking me about trading, you know, how you doing, blah, blah, blah. And I said, good. You know, I'm lucky. I have good trading psych. I tell myself, you know, no, don't do things. Yes, do things. Oh, you're wrong. I'll stop out. No big deal. But he was said, you know, hey, I've been doing really good and I am just struggling. And the best way that I could describe it was, you know, we went from beginner trading 101. You know, we go back and we look, I mean, at least in my opinion, we go back the better part of 6, 7, 8 years ago. You know, that was when the market really changed. This is easy. This is easy. You know, it's controlled. This is easy, easy, easy. And then all of a sudden we get mayhem. So the market went from, you know, how I described it was trading 101 to PhD level trading virtually overnight. If you aren't listening to the news, listening to the data, all of that, you're getting wrecked. Well, the market's starting to shrug off some of the data. They're starting to say, okay, you know, maybe we don't need to listen to everything that's said because, you know, like 10% of it is coming true. So maybe we can just kind of tune these things out and wait for the truth, wait for the real things, wait for proof of something, wait for all of that. And we're starting to see some market consolidations. You know, we aren't just getting blowout downside days, absolute ripper upside days. We're getting a market that's trying to gain its footing again. And so what has that done? It's killed the short chasers and it's killed the long chasers. You know, the market is doing what it, you know, one thing that we're seeing, market spends most of its life in a range. You know, I teach you guys that all the time. And people have these habits of, you know, I'm just going to hold. You know, like, you know, I've had puts that are minus 99%. And at the end of the day, I'm 300% green. I'm going to hold these or calls or whatever it is. And now the market is, like I said, gaining its footing. It is becoming, while still extremely volatile, big old moves, I ain't denying that. It is becoming less volatile. It's, you know, bouncing where it should. It's consolidating at levels, you know, generally speaking, you got to consolidate to break out. You know, I love trading consolidation. A lot of people don't, but you got to consolidate to take a breakout or consolidate to take a breakdown. You know, those things have to happen. So the just hold method is not working anymore. And it's a habit that people built very, very quickly. And now, unfortunately, as we are starting to get, you know, some more sideways movement in the market, you know, still putting up nice big moves, don't get me wrong, but days like this today, they're wrecking people. You know, nice move up, people looking for the longs, they're buying everything, they're buying everything. Oh, they're dumping it, they're dumping it. Oh, we must be about to get tariff news, short everything, and then runner sideways, you know. That's the best thing that you can do is just let the market work. You don't need to be chasing. Everybody's in this habit of chasing and this habit of holding these things. You know, we're seeing it every day. They think the second you get a little pop, market's about to explode. The second you take a little drop, market's about to dump. Unfortunately, it is not doing that. Like people have built the habit of, you know, the last couple of months. And so that's the first thing I wanted to talk about. And then it leads into kind of one of the second things is opinions. We all have opinions of this market. We all have opinions of, well, hopefully you have some sort of opinion of some of the data that's been coming out, whether we think it's good or it's not good for the market. I think it's important to be informed right now. Am I telling you to go read all of the boring stuff that the Fed says? Absolutely not. And especially if it doesn't interest you, it will mean nothing to you. But I can't emphasize enough how important it is to learn some little tidbits about some of the data points that we get, you know, your CPIs, your PPIs, all of those different things, all the different inflation reads, all of the different jobless claims, that kind of stuff. And like I said, you don't need to memorize it. You don't need to do all this stuff, but maybe make yourself a little cheat sheet that says, hey, I'm going to pay attention to this data and let it help you build proper opinions. However, the most important part of any opinion in trading is separating it from your trading. Anybody who's traded with me the last couple days, you know, and like, I'll just pull up the charts so we can look at them and we can like laugh. I've mostly traded short the last 2 days. In the last 2 days, don't get me wrong, the market's it's up 2%, 2.5% last couple of days, had some nice drops, had some nice moves up. I've mostly been trading short, even with all of these big rippers. You know, I caught some call scalps here and there, of course, but I've mostly been trading short because the data is not great that we're getting right now. You know, we got ERs, we got end of month, we got things to push the market, you know, but the data is not great. So I have my opinion and I have where I feel, you know, comfortable trading, but I will also be the first person to tell you, look at these charts. Was trading short the answer on these days? Obviously today, ultimately, and today it was. I wasn't in there, you know. But was trading short really the answer these days? No. And so this is an example of even I let my opinions get in the way. You know, like I said, I scalped some longs here and there, but I've mostly traded short, and I let my opinions get in the way. And that is a dangerous thing. Thankfully, how I trade, I can sneak a few bucks out here and there, and it works out for me. But when we start letting our opinions dictate our trading, that's where it gets really bad. And so, as I said, we all have opinions. Maybe you think tariffs are a great idea. Maybe you think tariffs are the worst idea for the American people in 100 years. Fine. And you can, you know, you can have whatever opinion you want. However, you need to be aware of them and then ignore them when it comes to actually trading. You know, we can look at this market and say, with these tariffs, with no deals, with blah blah blah, the market should be cratering. The market is not cratering. You know, I mean, don't get me wrong, we're still down 8% or something off highs, but at one point, you know, here 2 weeks ago, we were about 20% off highs. You know, or 15, whatever it was. This is where the market decided, and you know, you guys, I've mentioned to a lot of people, you know, you really got to wait for tariff day to know what the market is going to do. Obviously, they exploded us, you know, or they killed it, you know, they blew up the market. Things, blood in the streets, you know, biggest selling I've ever experienced myself. And so, and especially like the intraday moves, it was mayhem. Well, here's the pullback. This is where, you know, I think they're calling it a pivot now. I don't personally use that word, but they're calling it a pivot now on the tariffs. So this is where the pivot happened, and the market has virtually decided for us that, you know, tariffs are terrible. We know they're terrible, at least according to the market. They're terrible, but they've been taken away. And at this point, there's not, you know, there's 10%, which I think the market is overall okay with, but the market has decided that that is good enough for it. And so we've been able to, you know, as most of you know, trading with me, we've been able to start to buy these dips and look for some of these moves upside on this, you know, on this ripper that we've been on. However, as I start to get to this point, I have to be bearish. You have to be bearish pushing into these previous resistances. You have to be bearish, you know, on first breaks back over the correction level. This rally is an absolutely classic bear market rally. As most of you guys know, I feel we're in, well, maybe not a technical bear market. Obviously down here, 490.58, we were for a couple of days or whatever. Not a technical bear market. This is bear market activity, and this is market on edge activity. So I always have to, you know, regardless of my opinions, if I think the market should be up or down, I always have to go to the chart and let the chart really dictate my opinion on trading. Because if we're up at big resistance places where the market got absolutely throttled, they tried to hold it, and then, you know, we got clobbered. I'm not long there. I'm not the one looking for longs. I'm definitely not the one chasing longs up here. So today was a day where, you know, ultimately, as we finally pushed up to this previous stuff, our kind of first full day outside of that old gap that we had, I start to want to, you know, I'm definitely looking for shorts on a day like today. Thankfully it worked out for us. But regardless of my opinions of the data, or, you know, inflation being higher, wages being lower, hiring slowing down, job creation being down, you know, regardless, my opinion says the market should likely be going down on that, we're rallying. So we have to ignore our opinions and let the charts tell us what to do when our opinions are getting in the way of trading, which is, you know, that's kind of the final thing, getting rid of your bias. Like I said, I can think this is the worst thing ever. I can think that, you know, that something that makes the Great Depression look fun is coming. I don't believe that, but I could believe that. But it doesn't matter. That doesn't affect the market. I can only let the market tell me what to do and remove my bias. It doesn't care what I think. It doesn't care if I think, you know, these, you know, the Treasury people are geniuses or dumb, or the Fed people are geniuses or dumb. Market doesn't care about any of that. What my bias is, it can be right, it can be wrong. It doesn't matter when it comes to trading. So we always need to really just get rid of that as best we can. And so that's going to bring me into my final thing, earnings. You know, this one, you guys feel free to unmute your mics if you have questions, anything like that. It's earnings season. market does
I love you.
market does extremely wild things at earnings season, and most of them are completely unpredictable. We can trade our technicals during the day very well. Oftentimes you get these nice choppy ranges leading into very big ERs, like, I don't know, maybe Apple, something like that. And look at the moves we made in the market. This was the market showing a bit of uncertainty. I mean, this was like the weirdest thing I've ever seen. All of these are the ghost wicks or whatever you want to call them. But this was the market having uncertainty. That's all we're seeing there. Well, everybody wants to trade ERs. They see them as, I don't know if they see them as a get rich quick scheme. I don't know if they see them as just a gamble that they truly don't care losing their money. Something that I've seen over years is the people who say, oh, I took an ER lotto, I don't care about my money. And they say that going into close, and then the ER goes against them. Those same people are often the ones that are freaking out on trade floor when that ER is coming out, whether they're in too heavy or whatever it was. So tonight I want to talk about trading ERs. And, because you guys know me, I'm going to tell you, don't do it. That's 99% of the time, don't trade earnings unless it's AT&T, best stock on the market. Obviously get involved in those earnings long, any opportunity you get. And other than that, you don't touch them, because ERs there's too many unknowns. Don't get me wrong. Does somebody somewhere have some insider information that they're placing a trade on the ER? Probably. We don't, and we don't want that. If we make a decision to trade ERs, there's smart ways and there's dumb ways. Obviously, the dumb way, it's what everybody does in OT. I'm going to find a contract. I don't care the strike. I don't care the expiration. I care that it costs me. I don't care how far out the money it is. I care that it costs me $100. Does it work sometimes? Spectacularly. But does it fail 99% of the time? Absolutely. We've all seen the people convinced that, there's a bull flag on the daily heading into ER. Crash, you're going to get banned from my lectures. There's a bull flag on the daily headed into the ER. And, this type of buying and this type of price action means that the stock is going to go up. Well, or it means the stock is going to crater. You really don't know. You cannot base an ER decision on the chart. Like I said, sometimes will it work? Yeah. Most of the time, it is not going to work. Yeah, exactly, Scotty. I mean, you got the same odds. I mean,
I have a question for you, River.
Hold on, Norvin. What's it about?
So, since you're talking about ERs,
Yeah.
I had a strategy or an idea, not playing the name that's doing the ER, but something like correlated. Either if they do their
Yeah,
I don't know, anything,
buy. Yeah, other things. We're gonna get into that, Narvin. We're gonna get into that. So, but good question. That was a good question, Narvin. So everybody wants to trade ER. Dude, what's this profile pic everybody keeps talking about? Let's send it. Is it Scotty's? Scotty's the goat. Do you guys remember his Halloween costume that he won the competition with? I do, it was sick. Okay, so we're trading ERs. Dumb way to do it, how people in OOT do it. They they buy their way out of the monies. They pray. They say, oh, this contract only cost me $100. I don't care. And then they get super upset when it doesn't work. Well, the thing about ERs is, ahead of time what you have to do to make money. But nobody wants to look at that. So something that you can do when you're trading, oh yeah, I'm gonna have to do, give me 1 second. Something you can do when you're trading is you can pull up, let's see if this is gonna work for me. Yeah.
Yo, River, can I say something real fast?
Maybe
Like my thesis yesterday was
that your
ANET.
trash man told you business was good.
Now ANET was it didn't have earnings or nothing, but 99% of the time, every time Amazon reports, ANET, Datadog, Salesforce, they all move together. I've seen this.
Yeah, because they all got that AWS working together, you know, or
Yes.
not together, but in the same thing.
Yeah. Cloud
But
business.
okay, so we want to trade ERs, you know, we don't want to trade ERs, but we want to trade ERs. There's a very easy way to see what type of move do I need to make money on my stupidly out of the money thing. So if you go in Thinkorswim, you go into your option chain, trade tab, whatever it is, and you pull it up and you go to Amazon. We're going to look at Amazon today. $11.57 move priced in. So what is that? Oh God, dude, you guys are cracking me up tonight. Thank you. So what is $11 move priced in mean? You know, we've all heard people say it and we have no idea what it means. Or, you know, people generally speaking have no idea what it means. I wonder if I'm on the right account so I can pull this up. So, yeah, whatever, it's a small port. So Amazon, here we are. Here's our option chain for Amazon. What do we mean when we say $11 move priced in? Well, when we close the day, these 190 calls cost $600. You have to remember this is a 1 DTE. This contract should cost you $100, $80, something like that. I don't know off the top of my head. We aren't going to get into all of the Greeks and everything of like, you know, how to actually calculate these. But why does this cost $600? Because they have priced in an $11 move. So we know that they are adding a very large amount of value, basically based on the delta to this. So if this thing moves $11, it's actually going to be worth more than 600 bucks. But for this to be a $600 contract and to be break even, you will at the very, very least need a $7 to $8 move to get you break even on this trade. When you start getting further out of the money, 200 strike, $10 out of the money. This contract should cost $15 when it's the day before expiration, and it costs you $200. If you get an 11 buck move, you're going to wind up $2 in the money, and this contract is going to be worth $200 because that's the intrinsic value that is left. So when you buy these out of the money contracts, you really need to accomplish the expected move, because you have to remember, market makers are not dumb. They price these accordingly, and they aren't going to leave themselves in a giant lose situation on these because they know they can expect the volatility. So they set the price and they say, yeah, we'll sell you one of these for a 200 strike if you'll give us $200 for it, 1 DTE. So your 200 strike will need to end up, and it's 230. So you need to end up around $2 to $2.50 in the money to be break even. And then obviously we had the $11 move priced in. So that's $11 from where we were. To actually start making money, you need to go beyond this price. So it's a losing endeavor almost always, other than when you get those absolutely insane blowout moves. But we can even look at these, you know, the short side of this option chain. You can look at this as well and say, okay, maybe I wanted a 185 put and it cost me $375, and Amazon is down $6. It's a nice drop. You're going to be down 80% at open, even on this move, because it is just not big enough for you to make money. So that's why oftentimes the individual names are not the best way to trade ER. So if you want the safe way to trade them, the safest possible way you can trade them is shares. You buy some shares and you can say to yourself, you know, I'll risk 10%. Like, you have to think you're putting, you know, maybe you're buying that $600 contract and you're putting 600 bucks of risk on there. Well, maybe you can say to yourself, you know, I'm going to have a 10% stop loss in mind on these shares. you can buy 3 shares of Amazon for $600. And your 10% stop loss, you know, $19 down, you're going to be risking $57. Is it a ton of money? No, but it's very safe, and it's not, you know, zero or maybe break even or anything like that. It is, you know, it is, I'm risking 57 to maybe catch a really nice upside move. Maybe I can catch the runner. But if we break below, you know, if I'm entering at 190, we break below that 180, 175 zone, I take the stop out. And your risk is completely defined. You don't have to understand options. You don't have to do any of that. The other way to trade it is, and this isn't safer, it is still very high risk. There is still a very good probability that your contracts can go to zero. However, you can reduce your dollar amounts by trading things that are either, you know, sympathies, either affected by these, kind of as Norvin mentioned, you know, some of your cloud people can be affected by Amazon. Some of your other retailers can be affected by Amazon. But the one thing that we always know is going to be affected by Amazon is QQQ. You know, the NASDAQ tech. We know it has a very good chance of going down if Amazon gets clobbered. We also had Apple tonight, and you know, we had things going on. QQQ is your much safer bet. Not only can you get, I didn't try to level, did I? If I did, it was by accident. If I did, it was by accident. Not only can you get a dump, you know, after hours, and your QQQ can pay you and you can sell it, but your dollar risk is going to be so much less. And so again, if we, you know, if we wanted to short a QQQ, and granted, let's see, we closed it, what did we close the day at? 481. You want to short a QQQ, you can go $2 lower, is already half the price of your Amazon contract. Or maybe you want to take the little lotto, you're going to be in at 280 bucks. Much smaller risk if it goes in your direction. Of course, it's like any option. It can absolutely go to zero if it goes against you. So if you don't want to go the option route, you want to have some exposure, you know, maybe you've done your research, whatever it is, we aren't talking about that side of it. You want to have your exposure. I recommend leveraged shares. This is my single-handed favorite way to trade any sort of ER, is these leverage shares. Say I'm leaning bearish on Apple and Amazon's earnings. And you know, for no reason, whatever. Who knows why? But I'm leaning bearish on those. I'm gonna hit some of these shares. They're 29 bucks. You know, if I was gonna put 600 of them, I could buy 20 of these things. And you know, maybe you put them on midday or early in the day and you let them run. And I mean, you get 4% on your shares. Super safe, can sell them after hours. You have exposure to it. And you're gonna make a nice little chunk of change. You know, you'll make your 20, 40 bucks, whatever it is, with very, very, very little risk. And so that's why I want to talk ERs. Don't be the degen YOLO and the out of the money calls or puts or whatever it is based on feelings. Trade something like this. On the other side of it, if you want to be long, there's also TQQQ. And so obviously got throttled, but TQQQ is a leveraged QQQ bull ETF. So if you buy TQQQ, you think that normal QQQ is going up, but you get triple the exposure. But you get triple the exposure. So maybe QQQ puts up a 1% move. You can catch yourself a nice little 3.5% move or 3% move on the TQQQs. So these are my preferred ways to actually trade earnings. Now, to take it one step further, we'll go back to SQQQ. Say I am bearish on tech earnings and I want some exposure. They again have options. And you can look right here. I mean, SQQQ closed the day. I'm basically right at 30. You can buy a 30 put on TQQQ, 70 bucks. Swing it to tomorrow. Super, super safe, super low risk. I do have to point out, oftentimes have a wide spread on these weeklies. So don't just go in there slapping market on them. But if you want to swing long or short, your TQQQ, SQQQ options are definitely some of my favorite ways to go. And you can see a real nice return on them. Okay, and so with that, what kind of questions you got?
River,
Oh,
just
Norman.
to wrap it up with the earnings, can we just be clear that those out the money earnings plays, either calls or puts, they all go to zero at the end of the week, correct?
Unless you, unless you end up in the money, yeah, especially heading into a Friday. That's the issue. Heading into a Friday,
Yes, sir.
you get screwed on most.
Yeah. It's a sell-off day.
And yeah, well, and not even that it's a sell-off day. It's that if I buy a contract today that expires tomorrow, if it's not in the money by close, it's at zero because it's expiring worthless, you know? So
Yeah.
when you have Friday, your theta is 100% of your contract value by the end of the next day. So you have many, many things working against you. Especially swinging for a Friday earnings, you need massive move in your direction, wind up in the money.
Yeah, River, I remember you mentioned that like when there's high volatility and your cons go up, you should sell it because you're probably not gonna find the same volatility again.
Always, 100% of the time. That was even, Hood, and I know people played Hood. And I don't know, it got clobbered today, I'm sorry, you're long Hood and you don't take your money here, you're nuts. Like I don't, that was one that I really feel no remorse for people. You got a 4% rip.
I know. I saw that today, River. I'm like, damn.
I mean,
If they
this
didn't
was
sell that, they got
sell.
crushed.
Sell this. And like, don't get me wrong, if you're in a couple of them,
Are you talking strictly options with Hood? Because I got shares for Hood at around $30, and I'm kind of just holding those long term, you know.
oh yeah, and stick with those. This was people were gambling earnings, and thinking,
Okay.
and they're like, oh, I bought 1 week's time, so I'll be good. It had 320% IV, their contracts did. So they needed a massive move, and they're $5 out of the money, and so this, you get a 4% rip into close, 5 minutes to close before ER, you are making an obscene amount of money. IV is exploding in your direction. The contract is exploding in your direction. You sell this. You start to push up into 50 and you don't click sell. Like I didn't even feel bad for him.
It was there for like 10 minutes.
Yeah, I mean, yeah, and that's everybody, it got everybody. Like, and I feel bad, of course, that people lost money. I would never want you to lose money, but this type of candle is the best paying candle you can find in the market. You catch yourself in a 4% candle heading into ER, your contracts are up massive.
You're selling that shit the first candle off.
I mean, I'm selling this right here, and then if I got 3 or 4, this candle probably paid you 100%. So if you got 3 or 4, sell 2, 3 of them, and then it's free. So when the unthinkable, aka the thing that you should 100% expect to happen, this happens, well, you only lose on one, and you still walk away from the trade with money. Okay, but so with that, what else you guys got? Somebody besides Norvin. I know everybody loves hearing Norvin talk, but Oh my God, Scotty's got jokes today. Well, what's up? Anybody? Any questions? We can get Norvin back on the mic if you guys want. I'm sure that guy has a lot of stuff to tell us about, if that's what you guys are looking for. 1K, nothing.
How quick is it for you to shake off a loss? I mean, I know you're experienced, but you got any advice for people?
Depends on the loss, depends on the trade, depends on if it was, some bullshit, like, but quick, I don't care. I might go back and look at it at the end of the day to say, hey, what did I do wrong? I had a funny one. God, I think it was earlier this week. I've had a couple of fun. Oops, I'm looking at Hood. I had a funny one earlier this week. So as you guys know, was it that day? What day was it? It was probably Wednesday. So as you guys know, I always trade, I don't remember when it was. I always trade a protective stop. So what do I mean by that? I have 2 stop losses. I have my mental stop. You know, I'm buying, like, I'm just making this up, but you know, I'm buying SPY puts right here. I'm stopping out over the high of this candle. You know, if we push a little bit above that candle or anything like that, you know, close above it, I'm stopping out. That's my planned stop. You know, mental stop. It's not a hard stop. It's not on the chart. That's ideally a place where if we push up to it, that is the last line of defense where I expect it to stop. You know, maybe we push up there, but I expect us to reject down. Expect isn't the right word. I mean, hope, my plan, you know, like based on everything I know, that's where I expect us to come down. Well, I also trade a protective stop. It's a hard stop. It's going to be something like up here where the market is going dramatically against me. And, you know, my plan stop, I might be like risking $10, but I'm also going to look at this and I'm going to say, I don't want to lose more than $30 per contract. That's it. That's it for me. So I always have the hard stop as well. So that helps me shake off the losses quickly because I knew this, you know, if it really goes wrong, then I know what happens when it really goes wrong before I take that trade. So something like that I can shake off. I mean, and that's what I was looking for. I had one trade, it was in Mastermind. I thought it was this week sometime. But just like a Newswick, I think it might have been like one of these days or something. But I had my protective stop. It wicked it. It went, I remember the contract prices were like, my stop was at $170. It hit $169 and then ran green. So it happens. I just don't care. The best thing you can do is don't let a bad trade mess with you. Obviously, don't go in there, oh, I got to chase this loss back. You know, not you 1K, but other people, you know, oh, I got to make this loss back. I lost 100. I need to make 200 on this next trade to get, you know, back in the green. Take the loss, maybe glance at it and say like, oh yeah, I shouldn't have done that. I should have done that. Oh, there was one of my funny ones. That's the one 1K was part of. You know, I should have done this. Maybe I shouldn't have done that, whatever it was. And just move on. However, that doesn't mean dive back into a trade. That doesn't mean anything like that. Start watching the market again. Start letting the market set up. I think where people, one loss isn't bad, I don't think, for really like anybody, you know, because who cares if you take one loss? It happens. I mean, I stopped out today on something, I'm sure, you know, I don't remember, but I'm sure I did. Who cares? You take a loss. Where it becomes the real issue is the snowball. You take a loss, and then all of a sudden you take another loss, and then all of a sudden you take a third loss. And normal day, you wouldn't even taken that second or third trade, but you're making those bad decisions because all you're thinking about is the loss.
habits.
Yep, bad habits. And so the best thing you can do is hang out for a second. Maybe you're right, maybe you're wrong. Let the market work. I see Crash talking about it right here. You know, you get stopped out, and all of a sudden you're green. That, you know, you'd be green. That's just part of the game. You know, all we can do is take those losses. You know, go back at the end of the day. This is one. I mean, I can use this one because this one's hilarious. You know, so we bought some SPY calls. I don't know, this candle. These are fake wicks, mind you. Yeah, I call them fake, you know, they're something, but they're fake wicks. These are fake wicks, mind you. Well, we bought some calls. I had 3 of them. I scalped a couple of them for like, I don't know, 20%, 20, maybe, I don't even remember. Well, then this arrow right here that's pointing at the bottom of that candle, that's my stop out on those calls. You know, I was in them. They were a little bit of a lotto. I had been saying over and over and over again, we got to be cautious being short, looking for an end of day face rip for some window dressing, you know. But I finally said, whatever, you know, I'm taking this last one off. I'm going to protect some of my profits. And obviously we went into the rip of a lifetime, you know. And so massive explosion. I stopped out like the bottom tick. I don't know. 1K might remember. I mean, I think they went like $1 lower, maybe something like that. $2 lower, and just having to stop.
It went to 37. You stopped at 38.
Yeah, and then
or vice versa, whatever it was. Yeah.
Yeah, and then they ran to 400.
Sheesh.
So I mean, you know, we hit him for, I don't know, we hit him for $50. I scalped him to $64. I took the stop on the last one at $38, and then they ran to $400. It's just the way the cookie crumbles sometimes, you know, especially for me. And like,
That's
you know,
just strong.
Yeah, and that's why, I love the jokes of like, and I like, I love when people tag me and they're like, "Can you sell so we can print?" Like, hell yeah, dude, I'll take this stop so we can run them 1,000% or 800% or whatever they did. I don't remember, I don't think anybody held them that whole time, but some people made a couple of bucks there. But when it comes to a loss, who cares? That's part of the game, something that I talk about in trading. It's one of the only jobs you can show up, you can work your ass off 6-7 hours. And at the end of the day, you get up from your desk and you're like, well, I have less money than I had yesterday.
Yeah, facts.
Work.
But guess what though? But it could be the opposite. There's like always two sides on that table.
Oh yeah,
You could get up and be like, damn, I just made it a band, $500.
yeah. In
in a
1
couple
minute.
seconds.
That's the other thing, and
Yeah.
that's like, it's unfortunate what promotes the gambling mentality in trading, but people don't understand the
Yeah.
power of this. Like this stupid
Very
little
powerful.
green box on your screen can double your money. And that's what gets people all worked up and doing, degen things. They start looking for those candles when they shouldn't be looking for those candles. But
We're
yeah,
all victims. We're all victims. We did it before.
yeah, we've all
We're all
done it.
gamblers, River.
I mean, life itself is a gamble in my eyes. I mean, someone might have another opinion, but I think life in total is always a gamble. You
And
go to
I won't
Every decision.
yeah.
fully call trading a gamble. But it is undoubtedly something that you put risk on the table. And
Yeah.
that is uncommon. And a lot of, show up to your 9 to 5 job and like I don't care if you're working at McDonald's or you're working at a hedge fund or you're a lawyer and you show up to your job and you do your job all day long and you aren't necessarily putting risk on the table. Your check's coming, you're
Yeah.
getting paid. If you're doing
You're
your
comfortable.
even at the end of the day. This one, you kind of got to be like, okay, market, here's my money. I hope I get more of it back. You got to do everything you can to not only be trading on hopes, but you got to push that money onto the table to.
You are your own boss basically. Like you're literally your own boss. Like
Yeah.
own CEO.
That's what I tell
Hell
you.
yeah, dude. I think like it's all a gamble, right? Like we're gambling, right? We're trying to make some bread. We're trying to use our 9 to 5 bread to fucking double up or whatever, right? But like, yes, we are our own bosses, but it's like there's gambling. And then with the tools that we have, and like we're using the psychology to learn how to trade, like there's smart gambling. Like you got like cool thing about here is like it could be against you, but you could take your L and just call it a day and just get a
And it's
better entry.
like
Mhm.
we do everything in our power to.
River, correct
Yeah.
me if I'm wrong, but in my eyes, putting in a tight stop makes it more like gambling than trading. Because
Okay,
then,
okay.
Well, so like if you're
because
saying that,
my
yes and no.
thesis is that something's going to go up or down, right? And I know
Yes.
that I have a short window of time for that to happen. And if the pattern's still there, like, why am I getting stopped out?
Yeah,
Well,
that's
yes,
true.
and
That's true. Why don't you stop out, River?
But that is a technical side of that is the looking at the technical side of trading. If you are trading without a plan, you are gambling. If you are trading with a plan, you're putting on risk. I mean, Crash is saying it right there. A risk isn't gambling. You are putting on that calculated risk based on your plan. That's
Yeah, I mean,
different.
it happened to me 2 days in a row, man.
Yeah.
At the last 10 minutes, where I got stopped out, and then my plan
Okay.
worked out, and it's like, oh, you would have made 10 grand, but instead you lost $800.
Where was your question? Oh, okay, Aaron. Yeah, I'll get back to that in 1 sec. I'll get there in just 1 second.
I got
Because
it.
I have to make an amendment to what
Yo,
I said.
River, can you
Norvin,
pull up?
Norvin. So I have to make an adjustment to what I said. If you are trading from here on, this is end of day. If you are trading from 1240 on, you are jumping dramatically towards the gambling side. We can make all of our best informed decisions at this time of day, but the amount of money pouring into the market at this point, we're still making our educated guesses. But when you are this late in the day, you are tiptoeing much more towards the gambling side. I say it all the time, and I alert them and I take them, and sometimes we print huge and sometimes we lose 100% of the money on them. When you hit good trades end of day, it's 50% luck. I do not care
I
who
mean,
you are.
I wish I was getting in at the end of the day, so it'd be easy to fix. But it's like you get in. I mean, I'm on the West Coast, so I'm getting in at 11 a.m. or
Yeah.
10:30, and then we've had this like chop for a while in like the mid afternoon, midday, where I'm stuck in a position that like I am very like I don't like waiting to the last 10
Yes.
minutes to hope something happens, but I'm like,
Yeah.
we're in this chop where it doesn't hit my stop, but then I don't see enough profit to take it, and I'm like, fuck, what do I
Well,
do?
and that's where it becomes it's time, that's where you as the operator have to take over. If you don't like it, get out of the trade. Sure, I can say my stop, maybe I'm short, or maybe I short these lows for whatever dumb reason. And I can say my stop is a breakover up here. Well, if I start seeing strong consolidations, maybe I see a pullback and then we start bouncing again, I don't have to hold the trade. Like if the market is all of a sudden telling me, it is showing me massive bullish candles one after the other, and I'm short, we've had set maybe some sort of a double bottom, I don't have to wait for my stop. I can stop out whenever I want. And if you're getting chopped up and you're getting wrecked, chances are your entry needed work is the bigger issue. Almost always in chop, when I talk to people about trading chop, you end up smoked because of entry. So Aaron, to get back to your trade, first trade of the day is a loss. Do you do anything different for the rest of the day if you're so this is probably one of those situations where doing as I say, not as I do is probably a better thing, because realistically, if you get clobbered on your first trade of the day, get up and walk away for at least a little bit. There's if you're trading these early first 5-10 minute candles, you're going to get smoked all the time. Sometimes it works in your favor, great. Sometimes you get absolutely obliterated. If you're trading these early candles in the day, you got a high probability of losing. So if you get smoked early, get up and walk away. I'm a little different. It's a major source of income for me, and so I sit here and I trade. I'm not going to say that's the right thing to do, but I know that my trading psychology, it doesn't matter if my last trade was a loss. It doesn't matter if my last trade was a gigantic win. It doesn't matter if it's middle of the day, end of the day, none of that. I take a trade when the market tells me to take a trade. I trade the same setups over and over and over again. And so for somebody like me, if the first one's a loss, it's just a trade that didn't work. I don't care. If you don't have that feeling, get up and take a quick little walk, and that will really, really help you to just kind of, move on with the day. 1K, did that make you laugh?
Hey, River.
Yep.
So I need to know if this is for me, a psychological issue, or if it's just a probabilities thing. So today I took 3 small losses on 3 trades. I try to only do 3 trades a day max. All of them were losses, probably, within $20 to $30 each loss. Anyways, so I chart the daily levels, and we're coming up into a daily level, which at that moment would have been resistance. And it rejects and flushes. So then I wait, I'm being patient, and then I see it coming up to that daily level again, and I'm like, okay, so it's looking like a double top. It's hitting that daily level we sold off of earlier. I take it, fucking rips through it and goes against me. It did that shit to me like 3 times today. So I don't know if an entry.
It's probably luck. It's probably luck of the draw. It's
okay.
also what
I'm being patient.
What this day was.
Right. Okay.
This day to a lot of people was a very choppy day. So, I've been teaching a lot of people this first hourly range of the day, first hourly candle, 30 minutes before open, 30 minutes after open. It's the gray box.
But see, I started getting in my head and thinking, fuck, I should have took it the first time because that flush would have paid me, and vice versa too. There was times where it was coming down into a support and it rips, and then I wait for it to test the support again, and then it dumps through it, and I'm just going, what the fuck, dude?
Yeah.
Is it me, or is it just what's happening today?
It's just some luck of the draw, and it's likely, what's the market doing right now? Are futures doing that. So it's likely the luck of the draw.
Okay.
But I will say this was a range day. You were
Yeah.
you were not trading with a range day mentality. Did we break out of it? Yes. Then we break back into it. Well, now you really just kind of got to view this and say, okay, this is a range. I'm long at lows. Anytime we have pullbacks, I want to be long down here. We start pushing up to here, like today, you can pay me to be high or pay me to be long when we're this high, you know? Like, I mean,
So you see,
like
what time is that right there? Around 10 o'clock, go over to 10. See right there. Yeah, right there. So I saw that happen. And then the next time we came up to that, right there, right?
Yeah.
I
looked for the
shorted
short?
that. I shorted
Yep.
that fucking shit. And then it popped through it.
And then it
stopped.
popped. So
Yep.
this is a trade you should have held. I just look left. I see we have big break up above. I see we have big breakdown. I don't love pre-market high, but I'll take note of it if it's right there. We got pre-market high right over here. I look left. I short this. I see a candle pop, you know, and close 20 cents above my entry. I'm not taking that stop. Personally, yes, we closed above the level, of course. I just start looking left. And I'm like, okay, well, we closed under pre-market low. Like, I'm not going to short this candle. Well, no, let me rephrase this. I'll short this candle. I'll also short this candle. And I got to be honest, I'll short this candle. Yes, it's above the level. I get all of that. I just look left on the chart. And if I'm looking at this and I'm saying, okay, I'm going to get short up here, my stop is going to be this. That's it. You know, if I'm short up here, my stop's here. If I'm short right here, my stop is still up here. I'm just getting closer to the stop out point. You know, I want to see breakout points or breakdown points for stops, because that tells me if we're getting past that point, we're likely breaking out or breaking down. So, you know, this one is one where I would have taken this. I don't know if we got news or something right here. And that's why we got the big red candle, ultimately paid one candle later. You know, that's luck of the draw.
Yeah, that's what
Saying,
stung too.
yeah,
I was like,
yeah.
dude, really?
But I'll take this trade. And I have to identify my risk. You know, I want to be short at 561, 80, 90. We'll call it 90 as close as I can. And then I look up, I'm like, hey, 562.70. I'll put a buck of risk on this trade because I know I'm short in the top of the range. And I know absolute best case scenario, they could run this thing all the way back down to 560, the lows of that range. Or kind of worst case scenario, maybe I just get the scalp down to the EMA. It's a buck up, a buck down. It's a 1-1 risk reward. You obviously don't want to hit those all the time, but you can risk your buck up for your buck down when you're aware that you're doing that. You know, you aren't necessarily like, it's a range, so you aren't looking for a massive breakdown or a massive breakout. And
Hey,
that's
River, can I add to that?
Yeah.
Kind of on topic, kind of not, but, and obviously this is hindsight today, but when we see that price action we have most of the day, again in hindsight, but it's a good time. Just add a day, get tomorrow's expiration, because you can probably sit through those candles on puts.
Yeah.
And still, you're not going to get the big sexy gain percent wise, but
you will make
trade
the
plan
exact
probably would
same
work
dollar amount.
And I can have
Right.
a wider stop then with less dollar loss too, as well.
Yeah. So if your total position size, let's say hypothetical, it's $300. You got 3 contracts of 0 DTE. You could take a tomorrow expiration, same strike, and maybe 1 contract. So
yeah. And even just to like really like show you this. So here's well, let's pretend this is tomorrow. You know, let's pretend we're already at tomorrow. Okay. So we look, 46 delta costs us 147 bucks. Well, if you go to that next day, 49 delta. Yes, it costs you more. So, you know, people always talk, oh, you know, the big gains is 0 DTEs. Well, big percentage, literally the exact same dollar amount as a 1 DTE. Like, you will make the same amount of dollars. That's how option Greeks work. You know, you pay for the safety and the time. You know, obviously it costs you a little bit more, but yeah, you buy the same day that costs you 40 bucks or 50 bucks and you get a $1 move and you make $50. Then you're up 100%. Well, maybe you spent more on this contract. Oh, I didn't realize that we were even jumping a weekend. So kind of bad example. Maybe you spent more on this contract. you still made $50. It doesn't matter. Delta is delta. Compare your deltas, and don't get me wrong, you can get insanity on a same day where you wind up in the money enough to have a very high delta, potentially higher than the next days, but you will make the same dollar amount. I 100% promise you. That is how the market is set up. You know, you're taking on massive risk on a 0 DTE for massive percent gain. You are taking on substantially less risk for more money for the same dollar amount gain by buying a 1 DTE. You'll make the same amount. Like 1K said, you don't get the screenshot of 600%, but if somebody makes, you know, you get a $3 rip and you make your $150 from your $50 contract, yeah, you get to post the big percent. Well, the person with the 1 DTE, they also made $150 and they didn't sweat it. And one wick against them didn't kill them, you know? So I know it's hard if you don't have the capital, but that doesn't mean just trade 0 DTs. So yeah, thanks 1K. I mean, I appreciate you saying that, and it's a very valid point. There's no.
This is something else that stung for me today too. Is like, so I had a daily level charted at 563.9, right? I had to step away because I have a 3-year-old, so I had to step away from the computer for like an hour, and I come back, bro. if you
see this,
yeah, bro, right at my fucking level, dude. And I'm going, wow, what a massive short that would have been a good one to take, dude. And I was like, dude, being a parent, bro, being a parent.
Yep, crash miss, exactly. Crossfire, yep, shifting, and like, don't get me wrong. Overall position, I care about percent gains, you know, but when you're trading these things, like percent gain is only so important, you know. It often shows that you had substantially more dollar risk in reality, you know. Your $70 same day can go to 0 if it goes $1.50 against you. Well, your next day is only going to lose the delta. So it is very, you know, it can be pretty eye-opening when you start like actually doing those correlations of percents to dollars. And, you know, obviously I always care about a percent, you know, like good for you if you hit like 1,000% trades like all the time or whatever, you know, but like the risk you're putting on for that is bad, you know. So I just understand what you're paying for, and the percent return you're getting on it for that added safety is just, it's so key.
Anyone in here ever take screenshots instead of profits? You ever hear that running joke online about crypto?
Oh, dude,
I've done that.
Dude, I can't even lie, dude. I do it all the time because you guys know I'm a pretty staunch believer that seeing proof of position to me is very, very important. I understand people can Photoshop and shit. I mean, I can't. I mean, I'll make a fake Discord post of you to mess with you, but like, I don't get all the photo.
I saw a post one time that said, if you're thinking about taking a screenshot, just show your buddies. You better take those profits.
Yeah. And so like, it's happened to me because in pro, like I'm obviously, you know, I'm in the pro voice chat 5 days a week, 7 voice chats a week or something like that. And so I think it's important to prove that you're in a trade. You know, I'm not telling you to share your port. When I post screenshots, you will never see a dollar amount, and you will almost never see amount of contracts. That doesn't matter. I am posting, here is my proof of position, that I am in there with you guys. I made that money. This is a real trade. I'm not lying to you. That is always very important to me. Well, because that is important to me, I also am in voice chat, and I'm trying to trade, and I'm trying to get my phone going, and I'm trying to take a screenshot on my phone. And I'll tell you what, I miss a lot of good sells doing that.
Yeah, you got a lot going on, bro.
But you know, I'm trying to. I think honesty is crucial, and I think it's seriously lacking in.
Well, you're very transparent too. I noticed with what you got going on. So
yeah, I mean, I don't.
New listing.
It's fun, and we're all making a couple bucks. There ain't no reason to lie, dude. Like you know, ain't nobody gonna remember the dude who lies and says, "Oh, you know, I made $100,000," and you know, nobody's gonna remember you. Like it doesn't matter. I just don't understand like the puff your chest and lie and think you're the best trader ever. We're just here to make a couple of bucks, maybe have some fun, share a meme or two, you know, and have a good time.
Yeah, I agree, dude. Like, honestly, you can I mean, I trade crypto a lot, dude. I come to the classes like for the charting aspect and stuff like that. Like I'm like a big crypto guy, but like I use like BitUnix and stuff. Like I'll be trading with Grizz and stuff. But like you can, instead of like, you know, normally on Robinhood, you want to like, you know, show off to your homies and stuff like that. But cool thing about Bit Unix is that you can do your thing, you see your thing, take it, and then you can go to your order history and you can
And
pop that same
screenshot
thing
it.
up, call it a day. You know
I've
what I
done the
mean?
same thing on it. And then I also respect that it says closed. You know, I like that on BitUnix. And I've done that as well because, you know, I always sell with limit orders when I'm trading crypto. And so, you know, I ain't getting no screenshot. And so, yeah, I love that you can do that. And I'll even do it. I even posted one today. Well, funny enough, I posted my order being filled, the screenshot of the filled order. Showing how early I sold because it was a good laugh, you know. But I on you know for my tab and things like that, I like to post the Thinkorswim thing from my phone and do it a couple of these times. Like one time, dude, we were up like 60% and it cratered against me. And I got the screenshot of 60% and stopped out for minus 10%. So you know it's very real. Oh, I mean Norvin D Dog. I mean, I'll tell you what, horrible place to get long, but very close to a nice place to get long. But at this point, you're kind of staring down some of the biggest resistance on the chart. You know, over this 107, I agree. I think things start to happen there. You can, I mean, I guess it's a bullish candle, I suppose, you know. Oh, they got earnings next week. Yeah, they're just bringing it to a major point on the chart to send it, you know, to either send it or dump it. You know, they love to do that before earnings, just get it to a nice point. I'd be surprised to see it do much more than go sideways for the next few days. Yep, exactly. That's the 100% truth right there, man. You know, you guys know, like a bunch of you have traded with me, obviously, you know, and so I mostly scalp. We have a nice little, you know, we got a nice little win rate and voice chat with me, you know, and our bread and butter trades are 25-30%, and I guarantee you the people that are taking those are doing better than you know, they're doing better than the people hunting those 1,000%ers and stuff. Yeah, and Crash, you're right. That is like, I think that yeah, just long T forever is really the best advice I can give you. So we'll do this just for fun. Little compound interest, you know. So you know, everybody throws out these numbers. I average this much. Okay, you need to do this much money. So I want to give you an example. Okay, you got $1,000 port. Okay, awesome. You know, it's plenty to trade with. I mean, you can trade with $500. You know, you don't need a ton of money to trade in the market. You need to be smart with if you have a little less money. But people talk about 3% a day. Okay, we'll call it 3% a day. Include all days of the week? Nope, because we can only trade on the weekdays. So we know we got about 252 trading days a year. Daily reinvest. You have to market at 100% because that's like saying you're doing 3% on your money daily for the whole year. So you know, people love to say, "Oh yeah, I do 3% a day." $1,000. Oh wait, hold on. Oh, I haven't included the time period. Yes, I have. Give me a second here.
Your total time. So I think you do.
Oh, years, 1 year. There we go. Yeah, thanks. There we go. So here you go. You have $1,000 port. You 3% it a day. You have $2.2 million at the end of the year. So ask yourself, those people that are telling you they're doing 3% every single day, 1% every single day. And don't get me wrong, I know you take withdrawals. I know blah, 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 blah. But you know, people tell you that they're doing 3% a day. They're lying to you because you have to think, most of those people, the boasters saying that they're doing 3% a day, they aren't trading $1,000 port, they're trading a $10,000 port. Do you believe them that they made 22 million a year? Because I'll tell you right now, yes, you take withdrawals, of course, and blah, 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 but at a certain point, you don't need to take withdrawals because you're making millions of dollars. You're doing $2 million a month, you know, by the end. So when somebody tells you do 3% a day, do 1% a day, just tune them out. It's an absolutely stupid thing to think about. The only goal that anybody should have when it comes to trading is more money than yesterday. Like, I'm more stoked for the person who made $3 today and sends it, you know, and sends me, I'm up $3 today, than the person who sends me their port that's up 100% on a YOLO. Like, I'm not impressed by that. You know, I'm impressed by somebody getting out there, trading, making a little bit of money, you know? And so that's it.
So what, River? Quantum to the moon or what?
Yeah, 2035. I'll be riding that with you. give it 5 more years and I might take an entry on these
What,
shit
what do you
stocks.
do about GameStop?
so-
Are you long on GameStop?
Yeah,
3 years, baby. Give me 3 years.
you gotta keep a couple of GameStop shares in the back pocket.
River, are futures pumping or what was that earlier?
Yeah, they're exploding. What's up?
I
Yo,
wonder-
Spy. I just checked Spy right now overnight. It's
Yeah,
like
I seen something with China from
I go
on Twitter.
Futures are up 70 points off the lows, so I gotta believe something. I got nothing on the news. Okay, well,
Hey,
that's gonna do it, everybody. Thank
one
you.
more thing. One more thing, River.
Spy.
So like say for like someone like me who typically keeps like $1,000 port, I hear a lot of people say like, oh, only risk 1%. Like, are they talking about trading with $10 or are they talking about just risking the $10 by buying? You know what do you understand what I'm saying?
Yes. So here, if you have $1,000 part, there's a very good chance that there's a very good chance you're going to find yourself over leveraged in trades. Unfortunately, there's no way around it. You're going to have 10% of the port in a trade, but the key when you have the $1,000 port is entry, keeping that stop as tight as you can. I'm not saying hard stop on the chart, but like when you have less money, patience is even more crucial. Patience is even more crucial than somebody who's trading with a bit more money, where they don't care about, $5 or $10 on their entry. As long as the trade is sound, they'll take it. Well, if you're trading with a little bit less money and $100 contract, that's pretty common. You got 10% of your port in the trade. So you can't take too many of those with, your 20% stop, obviously never stop based on a percent, and lose 2% on all those trades, it will start to eat at you. So I always recommend smaller port. Don't even look at SPY and QQQ. It's a waste of your time. There's way too much risk. Go trade your Deltas, your Bank of Americas, your T's, your Coca-Colas. It's going to save you and your port is going to grow substantially faster, substantially safer than trading SPY and QQQ.
Thanks for that, bro.
Hey, yo, what's that? What's that quantum one again? I was looking on Robinhood, but I couldn't find it.
IonQ.
IonQ. Okay. Thank you, guys.
Bro, I fucking made a ton of money on that one, dude. I bought like 100 shares when it was at $7, and then I sold half the position around like 40, and I'm still sitting on 50 shares. So I'm sitting in that
Let's
free.
fucking go, dude. That's beautiful.
Just to see like where it is in like 10 years. You know what I mean?
Yeah, and I like it and stick with it, but okay, well guys, I got to call it here. Thank you so much. This was epic. Very, very good combo. Thank you everybody for chiming in. This was great.
Yeah, thank you, brother. Appreciate you.
Yeah.
Thanks, River. I appreciate you, man. Always, bro. Thank you.
Yep, thank you all. Yep, have a great night. Oh, dude, love you guys too, dude. We'll talk to you soon. Later.